Welcome to Time to Buy or Sell by Wykert Realtors, Sierra Pacific Group. Today we will be discussing the housing market in Placerville. And thanks for listening to Time to Buy or Sell. Right now we are seeing like half the homes in our city selling in under a month. But then the other half are just sitting untouched for over 4 months.
Yeah, it's a huge split right now.
Right, so today we're doing a deep dive into what separates the winners from the losers. Like, what do you as a buyer or seller actually need to know going into this?
Well, I mean, the very first thing is you really can't rely on those national headlines to make decisions about your specific neighborhood. It is just a recipe for frustration, honestly.
Oh, totally, which is why we're looking at the actual MLS.
Exactly, the multiple listing service. That is the actual database that local realtors use. It's updated in real time by the agent, so it's the absolute gold standard for accuracy compared to, those third-party national apps that just scrape public data and lag weeks behind.
Right, right. So looking at the raw MLS data for single-family homes this past month, we have 89 active listings, 36 pending, and 28 closed.
Mm-hmm.
And the median closed price is sitting securely at $551,500. But here's the massive disconnect, and I really want your take on this.
Okay, lay it on me.
So the local MLS shows a median of 40 days on the market. But if you look at those national real estate websites, they claim it's 99 days. So if you're jumping in, which dashboard should you actually trust?
You have to trust the MLS. I mean, the market right now is kind of acting like a nightclub with a strict bouncer.
A nightclub. Okay, how so?
Well, if a seller prices it perfectly based on those recent local sales, they skip the line. They sell in under 30 days, which, by the way, accounts for exactly half of those closed listings.
Wow, half. That is wild.
Yeah, it is. But if you overprice by even 5%, you are left waiting out on the sidewalk for like 120 days. Aspirational pricing just completely stalls out right now.
That makes total sense.
Yeah.
And you can't just slap that $551,000 city median on every house to figure out the right price anyway.
Oh, no, absolutely not.
Because the dispersion is massive depending on the neighborhood. Like Swans Country sits around a $514,000 median, but then you jump over to Pleasant Valley Estates and you're looking at $730,000.
Yeah, but even at that higher end, Placerville is still a massive value compared to the broader El Dorado County median, which is up at $722,500.
Right, which really explains the demand we're seeing.
Exactly. People migrating out of San Francisco and Fresno are really driving that demand. They want the foothill lifestyle with good schools, the great community amenities, and reasonable commute options.
But they're definitely hitting some affordability bottlenecks, right?
Right.
I mean, we've got prevailing mortgage rates hovering around 6.11%.
Yeah, which obviously impacts purchasing power. But honestly, the real hidden killer here is foothill fire insurance premiums.
Oh, man, yeah. The insurance is crazy.
It's brutal. You find a beautifully priced home, but if the fire insurance is astronomically high, it acts exactly like an interest rate hike. It just completely destroys a buyer's monthly budget.
And then you factor in the local policy shifts happening right now in early 2026. Like, the city is actively looking at capping short-term rentals in residential zones.
Right, and they're updating regulations for ADUs, the backyard guest houses or granny flats.
Yeah, which is huge. Because if you're an investor or even just a buyer hoping to rent out a room to offset that 6% mortgage, those regulation updates completely change your math.
They really do. It changes everything.
So if a $550,000 house sits untouched for 100 days because of massive fire insurance or strict rental policies, who actually holds the leverage when a buyer finally makes an offer?
Well, it's interesting. I mean, sellers are still getting about 97.8% of their asking price on average, but they definitely don't have a blank check anymore.
So it's shifting a bit.
Yeah, it is a slightly buyer-friendly, balanced market now. Sellers really must price defensively using local MLS comparables, not those automated internet estimates.
Right, definitely.
And they also need to prep for total inspection transparency because buyers are being incredibly cautious with their budgets.
Which is totally fair. We've talked about sellers needing to drop their egos, but buyers aren't totally off the hook either, right?
Not at all.
With rates over 6%, you really can't just wait around for the perfect unicorn deal. Like if a buyer's looking at a house that's been sitting for 60 days, they need to leverage that.
Exactly.
So instead of just asking for, say, a $10,000 price drop, what should they do?
They should absolutely ask the seller for a rate buy down or, closing cost credit.
A rate buy down, so like where the seller pays a lump sum at closing to literally buy down or lower your interest rate for the first couple of years of the loan.
Yes, exactly that. In this market, Using seller concessions to make your monthly payment more affordable is a much smarter high-leverage play than just chipping away at the purchase price.
That is such a great tip.
It really is. And here's a thought to leave you with. With Placerville tightening the reins on short-term rentals in residential zones, will we see an influx of full-time locals reclaiming the foothills? Yeah, I mean, that could completely shift the long-term vibe of the community.
Thanks for listening to Time to Buy or Sell. If you have questions about real estate in Placerville, we're here to help. Reach out to us at Weichert Realtors Sierra Pacific Group. That's Weichert Realtors online at wrspg.com or call 916-619-1971.